Ever wonder why the market trend for Polygon or MATIC has been on a downward spiral recently? So, let's dive into the details. Polygon, also known as MATIC, has recently been in the spotlight for its unanticipated market performance. In just 4 days, from the 9th to the 13th of April, the value of MATIC plummeted by a staggering 38%. Yes, you heard that right, 38%. Now let's talk about the resistance level. For those of you who are new to this, the resistance level is a price point on a bar chart for a security in which upward price movement is impeded by an overwhelming level of supply for the security that accumulates at a particular price level. MATIC attempted to bounce back, aiming to break past the 73 cents resistance level. However, it took a swift U-turn at 75.1 cents, leaving many investors and traders scratching their heads in confusion. This brings us to the concept of a bearish market sentiment. In simple terms, a bearish market refers to a condition in which the prices of securities are falling, and widespread pessimism causes the negative sentiment to be self-sustaining. As investors anticipate losses in a bear market and selling continues, pessimism only grows. And this is precisely what's happening with MATIC. Despite the attempts to break past the resistance level and the hope for an upward trend, the higher timeframe trend for MATIC has been bearish, indicating a potential for more losses. Despite efforts to bounce back, MATIC found itself in a stiff resistance zone. The higher timeframe trend paints a rather bearish picture. Now, you might be wondering what exactly caused this drop in MATIC's value. Well, it's all about support levels. Support levels in market analysis are like invisible floors that prevent an asset's price from falling further. When the price of an asset, like MATIC in our case, approaches this level, it is expected to bounce back. But what happens when these levels are breached? It's like the floor giving way. The price can drop even further, causing panic among investors and potentially triggering a sell-off. In the case of MATIC, key support levels were breached, leading to a sharp decline in its value. But how were these breaches detected? This is where market indicators come into play. Two such indicators, the Awesome Oscillator and the Direction Movement Index, were closely watched. The Awesome Oscillator is a momentum indicator used to confirm trends and forecast potential reversals. In the case of MATIC, it showed a strong bearish trend, indicating that the downward movement was not a mere fluctuation but a significant shift in market sentiment. The Direction Movement Index, on the other hand, measures the strength of upward or downward movements. A high value signifies strong upward movement, whereas a low value indicates strong downward movement. For MATIC, the Direction Movement Index was on the lower side, further confirming the bearish trend. These indicators, when combined with the breached support levels, painted a grim picture for MATIC. Investors watched as the price continued to fall with no sign of rebounding soon. This drop in value was not a mere dip in the market but a result of market forces at play, pushing the price down. The breach of support levels can be a wake-up call for investors. It's a sign that they need to reevaluate their investment strategy and consider whether it's time to cut their losses or hold on for a potential rebound. Key support levels were breached, with market indicators painting a stark image of a bearish trend. Let's delve into the market dynamics. What happens when demand in the spot market weakens? Imagine a bustling market. The air is filled with the chatter of traders and the clinking of coins, but suddenly the chatter dies down, and the coins stop clinking. The demand for goods in the market has weakened. This is a similar situation to what happened with Polygon or MATIC in the cryptocurrency market. When the short-term demand for a cryptocurrency like MATIC weakens, it can significantly impact the market sentiment. Market sentiment is essentially the overall attitude of investors towards a particular security or financial market. It's what drives the supply and demand in the marketplace. So, when the demand weakens, the market sentiment tends to turn bearish. This was reflected in the open interest data for MATIC. Now, open interest is a metric that gives us an insight into the trading activity and money flow into the market. An increase in open interest means new contracts are being created, indicating strong investor interest. Conversely, a decrease in open interest suggests contracts are being closed, pointing towards a lack of interest from investors. For MATIC, the open interest data showed a decrease, indicating that contracts were being closed and investor interest was dwindling. This was a clear sign of a bearish sentiment. Investors were not just less interested in buying, but they were also closing their existing positions. It's like seeing traders pack up their goods and leave the bustling market we talked about earlier. So, what does this mean for MATIC? Well, a bearish sentiment combined with weak short-term demand can lead to a downward pressure on the price. It becomes a tough environment for the cryptocurrency to bounce back, especially when key support levels have already been breached, as was the case with MATIC. The short-term demand in the spot market remained weak, leaving MATIC in a bearish state. So, the traders in our market have packed up, the coins have stopped clinking, and the chatter has died down. But it's important to remember markets ebb and flow. The bearish sentiment may linger, but it's always followed by a bullish one. After all, it's all part of the market dynamics. In hindsight, what can we say about the bearish market sentiment for MATIC? Well, it's clear that the past few days have been a roller coaster ride for MATIC, with the cryptocurrency experiencing a significant drop of 38% in just 4 days. From the 9th to the 13th of April, MATIC's value took a nosedive, struggling to bounce back above the 73 cents resistance level. Despite fervent attempts, MATIC hit a brick wall at 75 cents and 1 mil, leading to a swift U-turn. This reversal wasn't a random occurrence, but rather the result of a higher time frame trend that leaned heavily towards the bearish side. This trend indicates the potential for further losses, a reality that would certainly rattle any investor's confidence. But as we know, the world of cryptocurrency is nothing if not unpredictable. One of the key turning points in this saga was when MATIC breached crucial support levels. This breach wasn't a minor blip on the radar. It was a signal of a strong bearish trend, as indicated by tools like the Awesome Oscillator and Direction Movement Index. These indicators painted a picture of a market sentiment that was anything but bullish. Now let's talk about demand. The short-term demand in the spot market remained weak during this period. This was reflected in the open interest data, which mirrored the bearish sentiment. Speculators were on the edge of their seats waiting for an uptrend, but the recent losses proved to be a tough act to follow, casting a long shadow over future prospects. In conclusion, the bearish sentiment for MATIC is a result of several factors, including breached support levels and weak demand. As always, these trends offer both challenges and opportunities for savvy investors.